Well, good morning, everyone. It's 10 o'clock, so let's go ahead and call the meeting to order. Item number 2 on the agenda is to approve the minutes of the meeting of February 9th, 2017. I have a motion and a second on item 2. All in favor? All opposed? Motion carries. Item 3 is to ratify approvals. Item A is for the payroll for the month of February 2017. Motion is second on item A. All in favor? All opposed? Motion carries. Item B is the action of the Secretary and the Administrator in modifying the application due to a change in the average final compensation and monthly pension. We have 4 cases. We have a motion and a second. All in favor? All opposed? Motion carries. Item C is payment to the City of Oklahoma City in the amount of $944.68 for postage for the months of December 2016 and January 2017. A motion and a second on items 3C. All in favor? All opposed? Motion carries. Item 3D is the benefit payment agreement with J.P. Morgan for benefit payment services for the period of March 1st, 2017 through June 30th, 2017. A motion and a second on item 3D. All in favor? All opposed? Motion carries. Item 4 is to approve the claims docket. I have a motion and a second on item 4. All in favor? All opposed? Motion carries. Item 5 is to approve the following applications for service retirement. We have 9 cases. I have a motion and a second on item 5. All in favor? All opposed? Motion carries. Item 6 is to receive the report of death, authorize the payment of the $5,000 death benefit, and approve continuation of pension to spouse. We have 1 case. Motion to second on item 6. All in favor? All opposed? Motion carries. Item 7 is to receive the report of death and approve continuation of pension to the spouse. We have 1 case. Have a motion to second on item 7. All in favor? All opposed? Motion carries. Item 8 is to receive the report of death, authorize payment of the $5,000 death benefit, and authorize the Secretary to make necessary changes to conform on the following. We have 3 cases. Second. Motion is second on item 8. All in favor? All opposed? Motion carries. Item 9 is to ratify approval of the following: to terminate vested rights and receive a lump sum distribution of his or her employee contribution account. 1 case. I have a motion to second on item 9. All in favor? Aye. All opposed? Motion carries. Item 10 is to approve the following application of vested rights. We have 1 case. I have a motion to second on item 10. All in favor? All opposed? Motion carries. Item 11 is to reconsider the effective date of February 1st, 2017 for the 2% cost of living adjustment to eligible retirees approved at our previous meeting, February 9th, 2017. I don't want to make you get up, Renee, but we had, what did we have? We had one retiree that I know of asked a question about that? Okay. What's the pleasure of the board? I personally am not in favor of rescinding our previous action. If anyone else has anything they'd like to say, now's the time.
Mr. Chair, I know that Renee received 1 request to reconsider because we don't have a policy or a consistent practice to do it either way. I think we've done it a number of ways over the years. Can you, and I know you really don't want to get up. I need to ask you some questions on the record. Question number one that I have is, I know that the retirees, I don't recall the last time that we provided a cost of living adjustment or increase for the retirees. So if you could provide me with that information. And the second question is, if you recall the last time we provided that, what was the effective date, if you remember?
February 1st of 2016 was the last COLA besides the one we just approved this year. And that was the date, and it was 0.7%.
And it was effective February 1st?
Correct.
And if I remember correctly, the reason we made it effective February was because we did not receive the...
Right. The Department of Labor did not release the information until January 18, 2017, and that was after the date we could actually apply it through J.P. Morgan, and the first board meeting after that date was February 9th.
Okay. So we're pretty much at their mercy as to when they...
Correct, when they released the data.
Okay. Okay. Any other comments? Any other questions? Any other concerns? Okay, I'll entertain a motion. I guess item 11 dies for lack of a motion.
It needs to be stricken. That would be the action.
Okay.
The motion to strike the item.
Okay. Then I will entertain a motion to strike number 11 from the agenda. Second. I have a motion and a second to strike item 11. All in favor? Aye. All opposed? Motion carries. Item 12, investment consultant report. Morning, Jason.
Good morning, everybody. I won't take too long. I'd hoped to have, and I think I mentioned last month, that we'd have a private equity review and recommendation. We're putting that off till next month. There is a fund that we intend to recommend to the board. It's Apollo, which is a large buyout, more value-oriented complement to Warburg Pincus. Their offering documents just became available last week, so we haven't fully vetted it yet, and just wanted to make sure that we had everything done before we came to the board. So we'll do that next month. Good month in the markets. Just a few comments on the portfolio. You'll see in the monthly report, overall asset allocation, you're effectively in line with targets, slightly overweight to equities by about a little less than 2%. In line with fixed income. Real assets continues to be slightly underweight. That's primarily the opportunistic value add real estate, which functions like private equity, and we just haven't fully ramped that up. Within equities, U.S. equities continue to be overweight, as really until the last few months, U.S. stocks have done better than the non-U.S., but we've seen that turn around as emerging markets have really taken off over the last 6 months, and that's actually the best performing asset class. But your large cap is 3% overweight, and small cap's 2% overweight. I think you've been taking money for operating needs from small cap, right? So now this month you could we suggest that would come from large cap if there's a need. Just turning to the next page, you can see the 1 year return. I know we talked about this last month, how big a move the 1 month made and now 2 months, but if you recall that the calendar year return for the portfolio was around 7%. You take off a very bad last January and February and add two they're relatively good months, positive 1.8% for this month, and last month was similar, but your 1 year return is now up over 15% annualized. So very much time period sensitive to when we're measuring. More importantly, longer term, the last 5 years, the portfolio's returned 8.3% gross of fees, 7.7% net of fees. Trailing that policy index a little bit. Much of that has been due to insurance in the portfolio, the long-short component, 10%. When markets are way up, you're not going to be up as much. And now you really see that in the 1 year numbers. Really, from the long-only managers, it's been a challenge to keep up when markets are running up this much. But we're okay with that, as we've talked about for some time, because when markets are down, you're losing less. So your large cap is up almost 24% on a 1 year basis versus the S&P up 25. Small cap is up almost 31%. That's the combination of Times Square and Earnest, who were both here last month. The benchmark's up almost 32%. Not that they're doing anything wrong. It's just been a challenging period. But from an attribution standpoint, relative to that policy index, the 15.25 versus 16.35, the biggest impact is the alternatives, the long short and the private equity. Long short is still up 12.3% compared to the HFRI strategic, which is it's really a peer group of other long short equity funds. Your strategy is added about 4%. But in the policy index, we're measuring that against the S&P 500, primarily from a risk standpoint over longer periods of time. And we know that it has about half the risk of long-only equities. In short periods of time, particularly when markets are up, it's going to trail. That's 10% of your portfolio. That's trailing what we're measuring it against by 12%. So that's about 1.2% on a one-year basis relative to the policy index. That's where all that the dispersion's coming from. And then private equity as well. Private equity it lags the public markets. We know it's not going to behave like the public markets. It's a much longer-term investment. Since inception, and this is going back to 2009, your private equity portfolio overall has generated a little less than 11% return, so doing well, and we'll go into more detail of that next month. What has been a bit more challenging is your international managers, both in developed and emerging markets. Still decent returns, north of double-digit returns. The two areas there on the developed side, Lazard, your value manager, really struggled in the fourth quarter of the year, and Wasatch, the small cap, the emerging market small cap manager. And what you don't necessarily see the details here is what's going on. I think I mentioned this last month. Lazard really, from a relative performance standpoint, was hurt in the fourth quarter of the year when European banks, along with U.S. banks, rallied significantly as the expectation that rates would rise and lighter regulation in the U.S. It really impacted European banks as well, and Lazard really didn't believe that it should, and they were underweight financials. They really didn't own financials. Also underweight in materials, and those were the two best performing sectors, and that really is what hurt them on a relative basis. And then the Wasatch strategy, a couple things. One, emerging market small cap underperformed emerging markets as a whole by about 10%. If we drill down even further in terms of value and growth, just like in other markets, value, emerging market small cap value, outperformed growth, which Wasatch is, by 14% in emerging market small cap. Wasatch being a growth-oriented emerging market small cap manager, that was challenging. If we compare them to just the EM small cap growth benchmark, while they were down for the year by 1.9%, that benchmark was down 4.3%. So they held up a little bit better. But overall, compared to the overall EM small cap market, they trailed. It's a small allocation in your portfolio. Really what we're looking for there, that is an area where we're looking for more juice when markets rally. You're not seeing it in these numbers, but you may recall 2010, they were up 100%. So right now it's been a bit more challenging, but it's not inconsistent with what they're doing. Fixed income has been a positive as rates have risen. Your portfolio having much less sensitivity to interest rate movements, much more credit exposure, high yield, bank loans, and then the absolute return in PAMCO strategy has done very well. So not from an absolute basis, your fixed income, when you roll it all up, is up 5.5% over the last year compared to the aggregate index, which is up 1.4%. So 400 basis points of outperformance. When equity markets are up 25 to 30%, getting 5% in bonds may be not attractive, but we know the purpose of that is also to provide protection in more challenging environments. But you're certainly generating a return. And if you just looking at the pieces, the biggest diversifiers there, the PAMCO strategy up 6.5%, and Brandywine up 6.8%, when the aggregate is up 1.4, and the world bond index is actually negative over that period. So really getting what we'd expect in fixed income. And then real assets overall, which is a combination of your real estate and commodities, nice return, 12% return, being helped by the commodities now. Commodities have really run up as expectations for greater global growth has improved. Commodities pricing across the board, and that's added there. So all in all, returns look good right now. We're still, portfolio still has some, and will always have some defensive positioning in it. We think that's important because, as we know, things aren't always going to go up, and we could see it change rather abruptly. But certainly, everything's performing well. No manager issues at this point in time. Any questions?
Anybody have any questions for Jason?
Thank you all.
Thank you, sir. Okay. Let me get my glasses on so I can read here. Item number 13 is comments from board, staff, and citizens. Hearing none, we are adjourned at 10:17. Thank you.